Corporate Transparency Act, Beneficial Ownership Information Reporting Requirement. Do you have to do it? What does it mean? Stay tuned. Welcome back. We've been getting a lot of questions on the BOI, Beneficial Ownership Information Reporting, Corporate Transparency Act, whatever you want to call it. We've had a lot of questions on it. Do I have to comply? What does it mean? How do we do it? Etc., etc. So I'm going to go through and explain some of this. There was also a new court case that came out just last week, March 1st, that's very critical to this, and we'll cover that at the end, at which point then I'll tell you what I think you should or should not do. So let's go ahead and get started. Just what is this? Why are we having to deal with this? So what it is the government's trying to catch the bad actors. Those who are doing money laundering and other illegal activities and using shell companies and all the dirty things the bad guys do. Unfortunately, the only way they feel they can do that is to make everybody report all kinds of stuff. And unfortunately, that means you. The crazy part is this is the first time that we've had something like this specifically aimed at the little guy. So if you're watching this video, it probably applies to you. So who does it apply to? So I'm going to have to read a lot from this because this is pretty heavy, but I'm going to try to cut through the nonsense and give you what you really need to know. Who's required to do this? Well, who's required is any entity, both foreign and domestic, that is registered in either a U.S. state or an Indian tribe, unless they meet one of 23 special groups. And most of you aren't going to fit into that. The ones who do are ones that are heavily regulated. People like your CPA firms, your financial advising firms, things like that are heavily regulated. But the rest of us, if you've got a construction business or you're all kinds of small businesses, pretty much all of you are going to have to register. Let's take a look at who's not required. If you're not on this list, you're required. So, a securities issuer, government authority, bank, credit union, depository, so basically another bank, money services businesses, brokers or dealers in securities, same, investment companies, venture capital, insurance companies, state licensed insurance, accounting firms, hey, I'm off the hook, public utilities, financial markets, pooled investments, etc. Large operating company, that doesn't seem fair, but that's the rules, and subsidiaries of certain exempt entities or an inactive entity. If it's not actually doing anything, then it doesn't have to register. On top of that, if you employ more than 20 employees in the U.S. and had gross revenue over $5 million on the prior year's tax return, you're exempt. Everybody else, you have to report. So that's pretty much all small businesses. When do you have to comply? Now this is important. Catch this part right here. If you had an entity, LLC or corporation, before the end of 23, so 12/31/23, you have all the way until the end of 12/31 of 24, and stick with me, that's going to be really important. However, if you register your corporation or your LLC this year, you don't have that luxury. You have 90 days to comply, and that means you're probably going to have to go ahead and do it. You can sit tight for a little bit, but I don't think relief is coming right away for most of us, so I think you're probably going to have to go ahead and comply and register. Use your attorney if possible, or you can do it yourself, but if your attorney helped set this up, he's probably able to help with the BOI as well. Most accountants are staying away from it right now because there's a lot of things happening, and accountants, insurance companies right now are worried that it's stepping over into the realm of law. So the E&O insurance isn't going to potentially cover it. So for right now, it's either going to do it yourself or probably an attorney. I'm sure some accountants are going to do it anyway, but for us, we're going to try to go by the book. So that's what's going on there. Now, what all do you have to report? Well, you're going to have to report the full legal name and any DBAs, your business address, which also would include your state, your federal ID number, and Then you also have to report details on the owners. This feels very invasive, but we have to report all the details on all the beneficial owners, and we'll get more into what that term means here in a minute. We have to give the name, birthday, address, a unique identifying number, and issuing jurisdiction form of an acceptable ID, so driver's license, passport, things like that. But here's the kicker. What are the penalties for non-compliance? Civil penalties are $500 per day. And criminal penalties are a $10,000 fine with up to 2 years in imprisonment. I didn't see anything in the FAQs that actually defined what's the difference. I'm sure some of that is, if you're really doing something bad versus you made a mistake and just didn't comply, but still $500 per day? That's crazy. Now, there's a lot more information on this, and you can go to FinCEN's FAQs if you're really bored. It's out there, but stay tuned to the end of this video before you go doing all of that. They've got a lot there, but it's heavy. It's really, really boring, even more boring than this video. But let's talk about some of these details. Just what is a beneficial owner? Because these are terms that they're making up that we now have to define and try to understand, and that's where a lot of the confusion is coming in here. So any individual who directly or indirectly either exercises substantial control over a reporting company or owns or controls at least 25% of the ownership interest of a reporting company. So for most of you in a small business, that just means it's you. You're going to have to report. If your wife is an owner or your husband's an owner and they provide a lot of services, they're going to have to comply. But then there's also a term, did I bring that? Yes. Substantial control. Anybody who exercises substantial control. Well, what does that mean? I'm not even an owner in that case, but I exercise substantial control. So, and I'm going to put this up on the screen here to help you follow along, but it's somebody who, say, a senior officer, so maybe they're a president, vice president, secretary, treasurer, maybe they have the ability to make important decisions on behalf of the business. They have a lot of control over the finances, such as sales, lease, mortgages, major expenditures. So what I'm hearing here is if you're a high-level manager, maybe that's you, right? This could be a lot of us who don't think of ourselves as owners, but from the purpose of FinCEN, that could be you. And so it's something as this year goes on, we're going to learn more and more about that. If you have the power to do reorganizations, dissolutions, mergers, that makes you an important decision maker. Even though you're not an owner, we may have to report you as a part of it. And then unfortunately, they got this other category that they themselves are using called a catch-all. Really? So they got a catch-all. So basically, we don't even know what that means yet. So in other words, if in doubt, and you do end up having to file this, I think you're just going to have to include anybody and everybody that could have these until more information comes out. But once again, stay tuned. I got more thoughts on this at the end of this. We'll go through that. So what are some of the indicators? And this is coming straight from FinCEN's FAQs, FAQ D3. An important decision maker is an individual that directs, determines, or has substantial influence over these important decisions, exercising substantial control over a reporting company. Well, obviously a lawyer wrote that because that is all kinds of boring. But you get the point. If you have any questions, go ahead and drop that down below, but also use the FAQs. There's a lot there. I couldn't possibly cover all the FAQs here. Everybody would fall asleep. I might even fall asleep trying to go through it myself. So I'm not going to do that. But the FAQs are there. There's a lot of examples that are helpful. But as a general rule, if you think you probably need to be on there, you probably need to be on there. And I think that's the safest way to play this, especially with $500 per day penalties. Now, what's crazy about this is not only do you have to report, but then if anything changes, you only have 30 days to update, right? So what does change mean? Well, let's say you move. How many people think about updating with FinCEN their address because they bought a new house? Or whatever, you moved, or one of your key employees who's a beneficial owner, they moved. Well, what happened if they moved and they didn't even bother to tell you because they didn't even think about it? They're not an owner, they just happened to move. You'll find out sometime in the next 60, 90 days, maybe even next year when it's time for W-2s, and all of a sudden you're well beyond the 30 days. Per this rule, you're subject to a $500 per day penalty. And when you read the FAQs, they say if you fix it within 90 days of the move or whatever the change was or correction, they may waive the penalty. Doesn't say they absolutely will, but it says they may. A little bit different language, but I'm trying to simplify it. So this is a really, really big deal, and it's something we're not going to be able to take lightly. We've already been talking to an attorney here in Lee's Summit that's putting together a package to help cover people for this. Once I decide how we're going to go, I'll probably share his information publicly, or at least with my clients directly. I may not do publicly, but we are working on something. The main thing I wanted you to know about this is A, we know about it. B, we're working on it. C, if you start an entity this year, you can't put this off. You have 90 days to comply. Please don't take this lightly. But now there's a new thing that has just occurred. On March 1st, there was a judge in Alabama who struck this down. So what does that mean? I'm going to read you a little bit here. In a 53-page opinion released on Friday, March 1st, 2024, U.S. District Court Judge Lyles C. Burke granted summary judgment for the NSBA, National Small Business Association, ruling that the Corporate Transparency Act is unconstitutional and permanently enjoining the government from enforcing the CTA against, and this is key, against the plaintiff. That's not most of you. If you're not a member of the NSBA, you are not exempted from this. In their lawsuit filed in 2022, the NSBA contended that the CTA unfairly burdened small businesses by requiring them to divulge highly personal details, and I completely agree, to FinCEN. In addition, the NASBA argued that the small businesses could face average cost of $8,000 in the first year of compliance. I'm not sure how they came up with that number, but that doesn't matter. I also know the AICPA is fighting this, as well as I think the Bankers Association is fighting this. So this is just the first step. So what do I think you should do? If you started one this year, I already told you, you're going to have to comply, get it done. But for the rest of you, if you've been in business since before the beginning of the year and your entity was already established, my personal opinion and what I'm going to do is sit and wait. I'm not giving up all this personal information to FinCEN and getting myself into a compliance headache until I absolutely have to. We have until December 31st to comply. Hopefully this is just the first case to come out on this. There's a lot of pressure, so I'm hopeful. This is what I've thought about. I mean, when people have asked me last year, and I think Evan said it back in January in one of my videos, sit tight, wait, let's see what's happening. This is why I said that. I thought something like this could occur. So maybe we'll get a stay for a year. Maybe we'll get another court case or two. They'll go ahead and get this thing overturned. It's a massive burden for small businesses. Who even knows if it'll actually accomplish their goals of catching money launderers and bad guys? So that's my thoughts. Sit tight. Don't do anything yet. Also, I want to make it clear, if you're a sole proprietor, you aren't an LLC, you aren't a corporation, this isn't you. A simple sole proprietorship who does not have an entity is not under this law. So, want to make sure that's clear. Don't be confused by that. The rest of us, just hang on. We're watching this. We'll keep you alert to it. If this is helpful, go ahead and join, subscribe, And as stuff comes out, I'll give you the real answers, not a bunch of fluff. So hopefully this was helpful. We'll bring more information to you as we know it, and have a wonderful rest of your day.